When I think of insurance, I think necessary evil. But at the same time, I'm aware that life has a lot of moments that matter, that should be insured. Hello, you're listening to the Experience Pod. My name is Ada Irikefe. The Experience Pod is a one-on-one interview-led podcast that discusses the adoption, utilization of relevant emerging technologies and trends for impact-oriented professionals, researchers, developers, and students who demand realistic and thought-provoking perspectives on the opportunities and challenges presented by these phenomena in our unique environment. Today we discuss insurance, one of Nigeria's oldest industries spanning over 100 years. Health insurance specifically is one of the fastest growing areas of the Nigerian insurance. Despite this, less than 10% of Nigerians have access to health coverage, compared to 90% in some countries. In recent years, we're seeing more conversations centered around innovation, driving new ideas, and how tech-enabled insurance can disrupt the health insurance industry. To talk more about insurance, health, and thoughts on driving industry-wide disruption, I'd like to welcome Dr. Femi Kuti, CEO of Reliance HMO.
Thank you very much for having me on, Ada.
No worries. So we'll start from here. So Femi, how would you describe what Reliance does and what is distinct about its operations?
Awesome. Again, thank you very much for having me on the podcast. Great stuff that you guys are doing. Yeah, it's an honor. So Reliance Health, which is our parent company, and Reliance HMO, essentially our vision is just basically using technology to make healthcare affordable and accessible. And there's sort of like three key points or three key words in that mission statement. The first thing is technology. We're primarily a technology company. So even though people see us on the outside and say, we're an insurance company, or we're a health tech company, or, whatever, we're primarily a technology company that uses technology to reach the goals that we've set. The second big word there is affordability. Cost is one of the biggest parts of being able to access healthcare. In fact, if you look at the statistics, what you find is, a large proportion of families are basically one healthcare bill away from bankruptcy or poverty. A lot worse in emerging markets like Nigeria, but it's also the same you find in other developed markets. Some developed markets, like say the US or something, where healthcare bills are very high. So one thing we're focused on is finding ways to make healthcare more affordable. And the last piece is what we call accessibility. And we look at that from different angles. The first angle of that is just making the healthcare process easy to interact with and easy to use. So usually when people think about healthcare or going to the hospital, it sounds like this huge, very complex scenario where you don't really know what's going on. What makes it even worse, sometimes you walk into the office of the doctor and they're throwing, buzzwords and medical terms that you don't even know the meaning of. So it's quite anxiety provoking. So that's basically what we're about, just using technology to make healthcare affordable and accessible for as many people as we can.
Great. Thanks, Femi, for the brief. So I picked up tech-driven company, ability and accessibility.
Exactly.
And I like that. Well, in saying that, I think one of the issues with insurance and should I say healthcare access in Nigeria is low penetration. You've thrown out some stats, but I also know that we have stats from Oxford Business Insight, which puts the overall saturation at just 0.5% in Nigeria. Compared to 2.7 in Kenya and just under 17 in South Africa. Now, the argument is that it's a vicious circle. So where providers don't have enough capital, they don't pay claims on time. I hear that a lot. The T's and C's are long, and as a result, people don't trust. Yes, and we should trust. and there's a dip in insurance uptake and ultimately capital shortage. There's also another school of thought that says insurance providers have not yet cracked the right product fit for the Nigerian market. So in your experience, do you think that the increase in health insurance penetration is more dependent on providing better tailored products, or is it a matter of just building trust?
Yeah, thanks, Anna. That's a really good question. I'm going to start off by giving an intro to the answer that one of my medical school professors always says. It's like anytime you're answering a medical question, the first sentence is always, the causes are multifactorial. So it's a mixture of both, to be honest. There isn't one, let me say, core problem. It's a mix of both. And as you said, it's a vicious cycle where one is impacting the other. The first thing is actually the fact that a lot of the products that we have in the market are not specifically built for the majority of consumers that we have today, right? So the vast majority of products are built for big businesses. And then it also shows, if you look at the customer profile for the majority of like healthcare players or health insurance players, it's the big businesses, the big companies, to some extent, maybe some medium-sized companies as well. And they're the ones who the products that we have today are built for. So when you talk about things like annual payment plans, the ability to swap, the lack of telemedicine, it's not really built for the majority of people who sometimes work in either small businesses or are individuals who are like self-employed and just doing their own thing, or whose companies might not be interested in getting insurance. Or even, smaller companies that are just trying to survive and manage cash flow. So there's definitely the product aspect where we need to start thinking about who exactly is the customer and what do they need. I think we're coming out of an era where there has been a history of, let me say, broken promises to the vast majority of health insurance customers. And you kind of see that when people go to the hospital. And interestingly enough, it's one of the first things that we saw when we started Reliance, which was like a lot of people complained about, I don't enjoy the experience that I receive in the hospital. It's almost like you're a carrier, right? Like you show up and you say, hey, I'm an insurance customer. And the hospital is like, hey, just go and sit in the corner first,
just wait in one corner.
Just wait in one corner. Like, and then we'll attend to this person who's paying us, cash up front, the cash money. But unfortunately, overall, we're all kind of losing in the sense that we end up paying for healthcare and we're not getting the kind of healthcare that we should be getting. So in summary, it's like, it's basically both of them. There isn't one solution. And the truth is, if we really want to push the penetration of health insurance, it needs to be both. We need to start building trust, but building trust also starts from providing the right products and fulfilling the promise that we make to our consumers.
Great response. I mean, you just talked about building trust and providing the right product. And that kind of speaks to our new PwC strategy, which covers building trust and providing sustainable outcomes. And I think that's what we need more on. So let's stay on the subject of products and services and delve more into how they shape the market. I know in the past few years, there's been a lot of innovation. I mean, you're a technology-driven company within the health insurance space. I also know that you founded Kanpe. Is it Kanpe?
Yes, that's Kanpe.
Yeah,
Kanpe. Kanpe. That's really where we got the name from. We got the spelling wrong, but
Yeah. So it's actually Kanpe, as in
yes,
Kanpe.
It is.
Oh, cool.
Funny story behind that. The thing is, we know Kanpe is spelled Kampe. We tried to get the domain, it wasn't available. So I just spoke to my co-founder, to replay around with the spelling.
Nice one. But we get the gist, as soon as I saw it, I thought that's quite cool. So we do get the gist. Don't worry about the spelling.
Thank you.
So Kanpe is one of Nigeria's first telemedicine service providers. And this is before you now pivoted to Reliance HMO. What would you say, and you've kind of touched a little bit on it, what would you say goes into choosing new service offerings, and how do you determine the segments to target?
Yeah, when we think about our business and when we think about our entire reason for being or reason for existing, it all basically starts with the customer. You can't really think up what the customer needs. The customer needs to tell you what they need. Yes, they might not know exactly what fulfilling that need looks like. There's a famous saying from Henry Ford that like if you had asked people what they wanted, they would have asked for a faster horse. They wouldn't have asked for a car. But the underlying reasoning behind that is that they would still have asked to move faster, right? So if you ask the customers, hey, I would love to be able to get from Lagos to Ibadan in, an hour, right? But they might not know how that happens. But the point that I'm trying to make is that everything that drives new product offerings is essentially just listening to customers. And it's just like, what's your experience? How could this be better? What's your need? How is this different from like your expectation? And the vast majority of times, which is interesting, and it's exciting, the customer kind of tells us what direction we should look at and what we should look into. So for example, one plan that we've been sort of like toying with is something around the pregnancy space. A lot of people have been asking for that, and it's a tough plan to put together for like a retail customer, but it's something that we're working on. But it kind of just shows you the way we kind of think about new product offerings. The other place we also look for new product offerings is also what's happening in the space, and just locally as well as internationally. And then what that means is if we see somebody doing something interesting and exciting that would benefit the customer, it's like, oh, okay, how can we sort of bring this into our own complementary products, and how can we just like make this available to our customers as well? But I think at the end of the day, like the summary of everything is like, it just has to be customer led, and you just have to find a way to continue speaking to the customers on a regular basis to find out what their needs are.
Sure. No, that's a great response. And before I go to my next question, I want to ask a controversial question. And I know we're talking about health.
I love controversial questions. This one makes podcast interesting.
So let me deviate a tiny bit. It's a product that has taken off I would say, in South Africa. And I wonder why we haven't even thought about it here. It's funeral insurance. I know we're talking about health, but we're also talking about insurance. Is there a market for funeral insurance? And if there isn't, why not?
I didn't know we were going to go this controversial. I'll just be totally honest. South Africa is a very, very interesting market. Even on the health insurance space, it's very different from Nigeria. I don't know that much about the funeral insurance space, but I have spoken to a few people who are in that space. And the thing is, like, what's interesting about South Africa is like it's a really, really big deal, right? And it's very, very expensive. I can't make a comparison to like how big of a deal it is with Nigeria. I know that like in Nigeria, we take burials very like seriously, and that's super important.
Like seriously, but then we also have that culture. God forbid is not my
exactly.
portion.
The God forbid is and the thing is that also brings up one of the more interesting parts about insurance, where you were talking about the necessary evil. It sometimes is. The weird thing about insurance is that sometimes it makes you confront the possibility of an event that you really don't want to happen. And then sometimes people get worried that like, am I jinxing things? The fact that I'm considering that this is happening, is it going to happen? But I mean, that's one sort of reasoning or POV that people have sort of put forward to the difficulty in making insurance deal. But I don't think I'm totally in agreement with that, because I think at the end of the day, we do confront the realities of the dangers and the risks in our lives every day. That's why people pray when they get into a bus. And I think that like it's also about the positioning of the product. But more to the question, is there a market for funeral insurance? Personally, I feel there's a market for pretty much anything if you're focused on the customer need. And I do know that like there are a good number of people who are like, Baba's burial is probably going to cost me an arm and a leg. I'd like to be able to sort of offset that cost up ahead. It would be an interesting play, if anybody out there is working in that space, maybe they should be on this show to talk about that as
well. Let's watch the space. You heard it from here first, right?
You heard it here first, exactly.
Okay, so let's talk about trends. And when we think disruptors, I would say that in my generation and possibly my father's generation, there hasn't been any disruptor bigger than the pandemic. I mean, nobody saw it coming. It'd be interesting to see what the history books will be like in the next 10 years. It'll be a case of what happened in 2000 or, what I mean, how we used to read history in those days and what happened in 18 something. So, but it's such an important topic. And I always feel that we can't have a serious conversation without touching on the pandemic and what is also done. Let's bring it closer to what we're talking about, the impact in the Nigerian insurance space, particularly health. Would you say the biggest pandemic changes for Reliance came from pressures on internal operations or changes in consumer expectations? What are your thoughts?
That's an interesting question. I think for us at Reliance, I would say the pandemic kind of accelerated a lot of things that we had in the pipeline because, part of our vision, as I said, has always been accessibility. And then when we think about ease of use, we ended up at products that seemed to do really well during the pandemic. So we're talking about things like really scaling up telemedicine, really turning telemedicine from just a consultation to an ability to consult and pick up your medications, turning the platform into something that allows people to manage chronic care like, hypertension, diabetes, etc., without the need for people to always have to show up physically. It also included even our own internal operations. So one thing that we are as a company is that we were always like remote aligned. So we don't really have like open times or closing times. We don't mandate people to come into the office. It's always a part of our work. But I think the one place that we never really pushed it hard enough was in our call center, the Reliance Care Center. But we'd always had things in the pipeline to sort of make that happen. So, to be fair to people who work in the Reliance Care Center. But again, the pandemic just sort of accelerated all of that. So maybe for a bunch of products that we were thinking, here we're probably, 9 months, 1 year away from like releasing these things because we want to take our time to sort of like put everything. It was like, okay,
we need to do that.
We need to do this now. Like, we can't wait, or else, we're just not even going to be able to actually operate as a company in the new space that we're in. So I know this is a weird thing to say, but thanks to the pandemic, I don't know if you can say that, like, this sort of allowed us to like.
I call it the silver lining of the pandemic.
Thank you. I think that's probably a better term. Silver lining. And it wasn't just us, I really had to give kudos to like a lot of the other players in the space that just really managed to like turn around their models, both on the insurance side as well as the provider side, I think this was really the boom time for telemedicine, hats off to a lot of the other telemedicine startups that were able to get really great partnerships around this time. So I think for us, it sort of accelerated things that we had in the pipeline. But I think overall, I agree with you that it's essentially moved the space into a better place. And it'll be interesting to see how things evolve from there.
Interesting. With telemedicine, what's been the uptake like? Is it something that people are willing to do easily? I don't have any stats around that, especially again, culture has a lot to do with, type of products and services that we offer. And I would say now Nigerians, where I need to see you to feel you, to know that you are telling me the truth, and I need to get value for money, and I can't get value for money by just talking to.
Exactly.
Have people taken to telemedicine a lot more than, pre-pandemic?
Oh yeah, 100%. I think we kind of did have our telemedicine product pre-pandemic. As soon as like lockdowns happened, I think usage sort of like 10x repeatedly for months. They were just like increasing 10x almost every single month, or let's say on an average basis, let's say about like 6-7 times every single month. And I think, which also kind of comes back to what we're talking about when it comes to trust, right? Which is sometimes, especially when we're in a society that's a very low trust society like ours, sometimes something needs to happen to sort of push people to experience the thing by fire, by force, in a sense. I'm not a big fan of like forcing people to do things. But sometimes when by virtue of like what's going on in society or in the environment at that point in time, people will experience this thing of like, oh wow, this is actually pretty great. Like, maybe I overemphasize the need for some conditions, the need to actually see somebody. And it's not just healthcare. People see this across a bunch of industries. E-commerce like skyrocketed, online grocery companies, online food ordering companies just like skyrocketed because it went from, oh, I'm not so sure about this because I can't actually see the person on this, to, well, I really don't have a choice.
To a need.
Yeah, exactly. To like, oh wow, this is pretty great. I don't need to, get off my couch wear pants, wear a shirt. I can just do this in shorts or pajamas in my house and not leave the house.
Yeah.
It's the same thing. Yeah.
Cool. Nice one. Okay, so talking about, again, we're sort of still on the trends and talking around products and services. Now, current demographics and where the country is actually going to, trajectory of our country. We can't ignore the youth. We talked about who do we target, right? And you've also talked about how products and services are customer-led. Now, I feel that the youth are an important customer segment across all landscapes. What I don't see is, I don't see the insurance companies targeting the youth. I don't know why. And is there a particular reason? Is it because I won't even say they have less spending power, because they do. So what is it? Why don't you guys target? You haven't eliminated them completely, but there hasn't been an aggressive push towards the youth segment.
Yeah, that's an interesting question. I mean, I can't speak for most other players, but I can speak for us. I think the way we sort of look at things is basically focusing on the customer again, as I said. And what makes it a bit of a complicated question to answer is like, how are we defining youth, right? Is it 18 to 45? So, I mean, let's say we take the typical 18 to 45 range. I would actually say that the vast majority of products are actually targeted at the youth per se. Maybe the older end of the youth, because a good chunk of our customer base is basically between the ages of like the mid-20s to like the mid-40s is actually where the bulk of our customers are. And the reason for that is, if you think about the dynamics of why people are purchasing health insurance in the first place, usually there's like a family event that makes that happen. So very often what we're finding is that it's maybe somebody who has just gotten married and they're expecting a child, or somebody has gotten married and like they want to look after their family, or, they have children, especially young kids. And so if you're looking at the demographic that's either just getting married, planning to get married, or that they have kids in the range of, say, like 1 year all the way to, say, like 10, 12 years old, it pretty much falls within that like youth demographic. I think what people tend to think about when they think about like plans specific to the youth, or sort of like plans specific to younger single individuals, is like, oh yeah, this person is like, they don't have a family, they're like single, that kind of stuff, or they're just not married or something. The thing is, we do have a good chunk of customers like that, and there are a good number of products for that demographic. What makes that part interesting is that I don't think anyone has really figured out the product that would attract that demographic. And part of the reason is because the drivers that motivate somebody who is, unmarried, single, first jobs or second job, just starting out in their career, is very different from the drivers that would motivate somebody who, maybe has a kid of 2 or 3 years old. So that's one way to look at it. The other way to kind of look at it is that if you consider the fact that the vast majority of health insurance customers are actually companies and corporate, you do have a good number of young people covered because they're employed, right? So, so if you pick like a significant company, like a big chunk of the employee base would be people in that 20s, early 30s demographic. So it's kind of, I know the answer is kind of all over the place, but it sort of depends on how you're looking at you.
Okay, fair enough. Yeah. Okay, so talking about disruptive trends, we always equate disruptive trends to new business model. And one business model that we have seen, and I think majority of us have used, is crowdfunding. Yes. Yeah. And we see the use of last-minute crowd-funded medical intervention instead of relying on the good old preventative health insurance. Now, I know that space is a more complex area and possibly a more competitive model for traditional insurance. But some insurance have tapped into this opportunity by becoming an insurance provider to new crowd investment, I've used that, platforms. What are your views on this? And is this an untapped space for insurance providers in Africa to take advantage of?
Yeah, it's an interesting space, and it's very interesting. But I think there's one premise that sometimes we miss when we look at the crowdfunding. I'm assuming you're talking about crowdfunding for health, which is basically, or are you talking crowdfunding for health
So the way we've done it, that's the crowdfunding from an investment perspective, right? Normally that's really
exactly.
What we've used it for, or what it has sort of morphed into, is also crowdfunding for that emergency.
For medical bills, exactly.
Yes.
So what's interesting about that space is one sort of factor that people sometimes forget, because it's so popular, is the fact that it's annoying. Like, it's actually a nuisance for people who are in that situation. Because think about it, if you're the person who needs a kidney transplant, or you're the person who needs heart surgery, and you're basically sitting there, you have this webpage up on GoFundMe. You're basically sitting there waiting and hoping that there are enough people who are going to think your story is good enough for them to be able to fund. It's a horrible place to be. It's not the most ideal. So even though it gets done a lot, we shouldn't romanticize that particular part, because for the people who are in that state, it's not first. I think the difficulty has been, which is one of the challenges of insurance, is helping people understand how this thing that could happen so far down the line is something that you need to prepare for, and it's something that it could happen, right? And if it does, you want to make sure that you're protected from that. So I think that as much as crowdfunding is great, I do think that maybe what we should start thinking about is, why do we have the crowdfunding model as being so popular for funding healthcare in the first place, right? I have a couple of things. I think one of them is cost, which is the affordability aspect, right? Maybe insurance plans that would cover the kind of conditions that are covered that we typically do crowdfunding rates on are just too expensive, and might not cover things like, heart surgery or kidney transplants and things like that. The other thing is just the general cost of healthcare as a whole. Now, if you remember, a lot of these conditions, people have to travel abroad to get taken care of. As opposed to if we had them within Nigeria, hacked up with a bunch of other healthcare providers that are trying to build that capability within Nigeria. Also happens to a lot of teaching hospitals in Nigeria as well that are building that capability locally as well. They could definitely be doing a lot more in terms of publicizing that skill set. But I think that the more we're able to sort of, one, have a lot of that done locally, reduce the cost of that, the easier it becomes for those things to be plugged into insurance. And I think that the moment people sort of understand that hey, there's the option of never having to be in this situation ever again, right? Or ever, period. I think we will definitely begin to see that model sort of decline. But there are a lot of things that need to be put in place, and it's probably a long stretch. But I think the underlying thing is we kind of need to think about why that happens. But one thing that is interesting from the crowdfunding model that I think that we're beginning to look into, and it's something that's been quite popular in the fast-moving consumer goods industry, is the concept of statutorization. So it's basically taking something that costs X and breaking down the cost into X divided by 10 over smaller portion. And that's essentially what's happening in the crowdfunding model, right? It's the same thing where it's a heart transplant costs 10 million naira, but I'm going to get 1 million people to donate. So can we sort of flip that model around and say, instead of getting 1 million naira, 1 million people to donate that money, could we get one person making that 10 naira donation 1 million times? And I think that's something that's interesting that we're actually sort of exploring our lens as well to see how we're doing something similar with the monthly health insurance plans, but there's also something similar as well that we could say, hey, could we statutorize the cost of a health insurance plan? So say, for example, let's say, you had a parent and you had 3 or 4 siblings, right? Could we sort of break that cost up between your 4 siblings and just break that cost between yourselves to purchase health insurance for that single person? Yeah.
That actually makes a lot of sense. That makes a lot of sense. And again, that's one of the silver linings of the pandemic, because you had enough opportunity to just look inwards, outwards, or outwards, inwards, as the case may be. And just
question your mortality.
Exactly.
Exactly.
So obviously, being a tech-driven company, innovation is up your street. I mean, when we look at the various drivers that are linked to innovation, you look at customer behavior insight, industry prediction. We just talked about like modeling, trends from parallel markets, and of course, tech development. That's technologies like the enabling. In your opinion, what's the key starting point for health insurance or general insurance innovation in Nigeria?
How long do we have?
I'm just going to say that's a jam question.
It is a jam question. And jam is hard. No, it's a good question. I think where we need to start is actually getting really good at accumulating quality data. I think that's something that we're discovering at Reliance as well. When we started out, my co-founders and I, we did think that data was important, right? But that's what people say, right? Gathering data, we'll use data, etc., etc. It's a good buzzword. But I think we're really only just discovering how powerful it is in terms of how we structure our business. So I think if I wanted to say that there was a good starting point, it would be just being good at accumulating, storing, and utilizing the data that we have, in the space today. And there is a lot of data. There's a lot of data that happens on a daily basis. But the question is, how well are we using that data? How well are we, capitalizing on it? So if I had to, say one starting point, as opposed to just customers, it would definitely be the data aspect. Yeah.
Nice. I know that's definitely in line with Reliance HMO. We've heard you speak about providing value to marginalized groups using data. And of course, you have to have clean, good quality data to be able to provide that services. Now, compared to the higher income, or should I call them big corporate clients, the margin for premiums from low income groups will be lower, right? But we realize that, and you've also alluded to that the insurance providers sit on some serious data. I mean, you guys sit on some serious data. Are there other avenues for coming up with value-added services, or should I say alternate forms of revenue? I mean, you have to be careful. Don't tell us everything. So I know that some things are like trade secrets here, but it would help us in just sort of understand how passionate about, the masses. So how does the data that you've acquired, and how does AI, I know you guys use AI, how does it help provide the necessary premiums without making you guys go out of business?
Yeah. It's a really good question, and it's something that we do spend a lot of time thinking about. And there are basically two places or two parts to sort of providing that. When you think about health insurance or like healthcare to, let me say, the lower income demographic, the major driver at the end of the day is cost. So if you can control cost on multiple levels, you'll pretty much be good. And the reason why cost is a big deal is because the great thing about contributory financing models is the fact that the more people you have in the pot, the fewer everybody needs to contribute to be able to receive service. And the great thing about allowing, especially in an emerging market like Nigeria, is that pool of, people is huge. It's a lot of people. So theoretically, if you can get as many people, a decent proportion of those people into a pot, it actually becomes cheaper for each individual. The question is what's the path or what's the road to doing that? And that's why you sometimes find that a lot of players who do want to start going down the pyramid start at, the higher income and the big corporate clients, because that's where you can kind of gather the momentum to be able to start going down the pyramid. But specifically regarding technology, I think there are two parts in which technology is like huge. Still basically the data aspect. One is underwriting, and the other part is what we call adjudication, or let me say claims processing. On the underwriting side, right? Like the honest truth is we don't really have good underwriting models to be able to price the risk of healthcare. In a lot of other countries, people can sort of price what is the likelihood of a 32-year-old, single, female, 0 kids, 10 years of experience earning X to Y income. What's the likelihood of what's the expected or estimated healthcare cost for this individual over a period of say 10 years? The data sets are there and they're able to sort of come up with those questions. And that's really where you need to start. If you can't price the risk, you can't give a price that makes sense. It's possible the price might be crazy to start off with, but at least you, as I said, as you increase that pool, you're able to sort of get better at bringing that cost down. So I think that's the first thing, just like using it to build the right underwriting model so we get the price properly. The second thing would be claims processing. So if you look at the cost structure for health insurance, and even most of the healthcare related things, outside the actual healthcare expense itself, the process, no pun intended, the process of processing those healthcare requests, processing things like claims and stuff like that, is actually the next highest cost item. So if you look at something, you have like a 13% claims processing center. And that's even just the obvious cost. The hidden cost of that are the errors that are made in terms of maybe conditions that shouldn't have been approved, that were approved, mistakes from the provider in entering pricing errors. So maybe, paracetamol that should have been 10 naira per tablet was entered at 100 naira per tablet. So one thing that the data allows you to do is to just like clean things up and make sure that you're basically bringing down those costs significantly on multiple variables. And I think that by the time we're able to sort of like solve those two problems and then start increasing distribution, it would be a very exciting market. It's very hard. So I think one thing that people ask is, like, guys are tech driven now. It's hard. It's very hard. I've done a lot of hard things in a lot of hard things in my life. But it's also interesting and it's also important. And it takes time.
It does take time, but we'll get there. I mean, you guys, we're just starting. We always say that when it comes to insured tech, where our development is possibly in last half decade, right? Would you say
exactly. I agree.
5 years?
Exactly.
Yeah. So compared to
and that's even not just that's not even just Nigeria. I would even say globally as well.
So which is interesting. So I do know we'll get there, and like with technology, we just have to keep trying and refining until we get the right computation. What would you say the biggest problems are with emerging technology? Is it a case of upscaling? We have a case of too many technologies where we're good at acquiring technology, but we're not good at utilizing technology. Have you seen some wins when you talk about emerging technology? And have you seen some not so great use cases?
That's an interesting question. I think when I think about the problems of sort of like using emerging technologies, I think the one thing that does come to mind is, I don't know how to sort of articulate this, but just like getting distracted. There's something about emerging technologies that's extremely sexy. VR, AI, data science, Internet of Things. It's all like super. But very often we lose sight of the fundamental truth, which is that these are all tools. They're all tools, right?
Enablers.
Exactly. They're all enablers. They're not the main thing. And I think that it's very easy to get caught up in that whole mindset of this is exciting. How can we use VR? I was like, but no. It's not the right way to look at this thing. It's like, what do our customers need? Right? And then one philosophy that we actually have at Reliance is we actually want to make the emerging technologies invisible. Like, you don't even see it happen, right? This technology, people find it daunting, right? People see when it works, the magic that makes happen. But just the fact that they're interfacing with a machine is very, very daunting to most people. So I think one thing that we try to strive for is to make the technology invisible. Everything works. It works like magic. It's just like, it's like juju. But the thing is, you're not seeing, it looks like you because we're sort of hiding or sort of protecting you in a sense, not to sound condescending, from the complexity of the stuff that's happening at the back end. But I think the biggest issue is getting caught up in the excitement of these emerging technologies and forgetting that they're essentially tools and they're essentially enablers to achieve the primary goal, which is how do you make life easier for people, and how do you help people achieve the goals that they want to achieve, and how do you help them meet their needs?
No, that's so valid. I like the bit where you said make technology invisible, because the average Joe does not want to know about AR, XR. It's lovely that it's there because it helps just simplify the process. But I'm not interested in the back end. Yeah, so I like that. That's
nobody's excited about WhatsApp because of like secure encryption or 65 bit. Nobody really cares about it. It's like, oh, I can like text my sister at like 5 a.m. and I can send her pictures of my
kids. What I mean? The one I like is to put my ATM card in the ATM machine and get my money out. Whatever happens in the background, so not interested.
Like be somebody sitting inside the ATM, collecting the card and then pushing the money out. I don't really
No, but just make sure that my card is safe. I put it in, I bring it out, and my money comes out with me. That's all I'm interested.
And more importantly, my account only reduces by the amount of money I'm taking out and not more.
Exactly. The thumbs up to technology. So let me take you off the hot seat and ask 3 random questions.
Oh, nice.
Three random questions. And they don't have to be related to emerging technology or trends, but let's just ask, So if you can tell our listeners, what was the last prediction that you got wrong? I've heard some really interesting answers.
What was the last prediction I got? I'm not thinking because I get most of my predictions right. No, that's not true. I'm actually
right.
Right. This is why I don't play betting, because I'll lose all my money. I'm sure my predictions will be right. But I think it would be crypto, right? It would be crypto. Yeah. I wouldn't say it was more of a prediction. It was just more of like being lackadaisical. So like I've been involved in Bitcoin back in like 2016, right?
Nala.
I am
not
lying. No, not of things. If I had been sensible, this story would be going in a completely different direction.
We probably won't be talking. I would have to address you as billionaire doctor,
chief doctor, exactly. Maybe something like that. Alas. So it's actually an interesting story. So it was my friend who was getting paid in crypto for some work that he was doing, but he couldn't process the transaction. So I was helping him sort of like facilitate that because I had a crypto account. Thankfully, there are a lot of great startups that are solving that problem right now. So I was like, oh, what's this Bitcoin thing? So every time he would ask me to like help him receive X amount of crypto, I would then buy the equivalent amount of crypto, right? So if it's like, oh, they sent me 0.25 Bitcoin, I was like, okay, I'll also buy 0.25 Bitcoin and keep it in my account and send it. This is kind of as a lark, right? I don't know what happened, but at some point I was like, no, this is nonsense. This is silly. What am I doing? And then I stopped. Thankfully, oh my God, it's interesting in the podcast. People need to see your face at that. Cringe. And then I stopped. Thankfully, I'd accumulated a few, but anytime I look at crypto prices right now, I'm like, what were you doing? What were you thinking? No, that one, yeah. I try not to think about it. Thank you for bringing up such a traumatic. Thank you for bringing up such a traumatic story. Now I'm going to have to like cry myself and try to keep.
No, you have to take out the moral of this story. The moral of the story is
the moral of the story. Yeah,
just keep it in.
No, I think the moral of the story. No, I think the moral of the story is probably the moral highlight is if like something is a lark but isn't going to cost you anything, but there is the potential that it could be something big. Why not, right? Like, why not?
Yeah, why not?
Because I think at that time, like it was cheap. You never know. Right? Yeah,
you never know.
Don't be like ridiculous, silly about the whole thing. But like you never know. People
don't put money. money you can't afford to lose.
Yeah, don't put your mortgage or your student fees or your own school fees into the thing.
Yes.
If there's free money around, take the risk. Yeah, that it bit me.
I've taken lessons from that. So ask me in another 2 years. So my second question will be, what's one view you seem to find very few people agree on?
Okay, one view that I find that very few people agree on. This is a bit meta, but I would say is how to agree, right? And what I mean by this is that we're now sort of shifting into a society where we're all in our own individual bubbles. So you see this on social media, you see this on TV, and like in a bunch of elections worldwide, you're kind of beginning to see that where everybody wants to take, the position of their cap. But then when we sit down and have an actual non-emotional, straightforward, sensible conversation, we find that we actually agree on more things than we disagree about, right? But for some reason, we're in a society where we sort of emphasize or escalate the disagreements or the differences and minimize the commonalities. And it's unfortunate because, I think by the time you do have conversations with people who have different opinions from you, you find that actually we're pretty similar. And sometimes we're looking at the same topic or the same angle from completely different points of view. And if we just sat down and took time to understand the other person's life experience, maybe we would find agreement. But, let's see how things evolve.
I like that. I think one of the evils, let me use the word evils, that plague us is that we don't listen. So we're saying the same thing.
But we're not listening. We're not listening to you.
We're saying the same thing, but I'm not listening to you because I have to get my point across, and you need to agree with me rather than me agree with you. So 100%. That's deep. Okay, 100%. So we have a question from our previous guest, Mr. Victor Kumala, who's the co-founder and executive director of Captures Solutions. And the way we ask this question, you don't know who the next guest is. So he just asks a random question. And when I saw the question, I thought, how apt. He obviously has no clue who the next guest is. I can't tell you, I don't know who the next guest is going to be. And his question is, how do you think you can use advanced technology to improve your processes? Isn't that?
I think we sort of discussed it.
We talked
we touched on a few examples of that in the conversation. So I think earlier I talked about claims processing, adjudication and stuff. I think another interesting thing that I could add to that mix might be our customer experience. So one thing that we spend a lot of time doing at Reliance is, how do we make the experience of calling our call center a great one? We actually don't even call it a call center, we call it the Reliance Call Center instead of the call center. So the entire premise is that if you're contacting us, we know that you have much better things to do with your own team, much better things to do.
Sure, time.
On your WhatsApp. And so the whole concept is how do we make that experience better for people? And there are a bunch of technology that we use. We've been spending a lot of time working on, automations like chatbots, automated responders, and those kind of things. Yeah, so I think I would say, to give a more definitive answer, probably would be chatbots on chat care center response lines. It might not be advanced technology depending on who you're talking to, but I think it's something that's interesting.
No, but it's a good one. So finally, we say that disruption is interrelated. In that respect, what's one perspective you would like to get from our next interviewee? Like I said, we have no clue who the next person is.
Who this person is.
I have no clue. It really depends on calendar. See how we try to get hold of you. We had to call presidency and
it's so easy to get a hold of. In fact, what I thought we were should I come to your office? Let me start checking out now.
No, that's not true. Tell the truth. Tell the truth.
Let me think about this.
Okay, go ahead.
Okay, yeah. No, this is what I would. Okay, spending a lot of time thinking about has been public services, just like the services that we get, from the public sector per se. So I think one thing that would be interesting to get a perspective on from the next person would be, how do they think we can disrupt public services? But I don't really like using the term disrupt because it sounds very rebellious and almost anarchist. That's not really what I mean. But disrupt from I think I would use improve. So it'll be interesting to get a perspective on that. I actually enjoy having those kind of conversations with people. So I'll keep an ear out for the next episode to see how.
We'll let you know. We'll definitely let you know. That's a brilliant question that I think we need to banter on, especially as we're going into the elections.
Yeah.
So we'll keep
I think there's massive opportunities, but it will be interesting to get a lot of
Absolutely. Absolutely. Thank you. Thank you so much. It's been really interesting. I want to thank you so much. This has been extremely insightful for me. It's been fun, actually. I really think that insurance space is the next big space. I wrote an article recently, probably about 2 months, and I talked about insurance space, that what's happening there,
Yeah.
That the way the fintechs have taken up insurtech, insurance needs to get to that level. And I believe so, with people like you in that space, I believe that there's more to come. Thank you so much for your time. Thank you so much.
Thank you very much, Ada. This was a whole lot of fun. This was very exciting. I love the questions that you guys asked. These are very important questions. Great work that you guys are doing here. And thank you very much for inviting me. This was fun.
Thank you so much.